Friday, December 6th, 2024, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at the dollar, Clive, and my argument today, and I'm going to prove it to the world that Jay Powell doesn't know what a dollar is, and that Jay Powell is being kind of economical with the truth about gold and even Bitcoin. So, Clive, good morning.
Good morning, Mario. Well, whatever, I don't know what Mr. Powell said because I haven't read it yet, but I'm quite sure he should be doing his job, which is defending the dollar, right? Or
Uh,
isn't he?
Or you mean the Federal Reserve note?
Well, yeah, exactly, the paper dollar.
Yeah. So I'm gonna play this clip for you, and I think this was recent. I think, and this guy here, I don't know, he works for Bloomberg or one of the mainstream shops, and of course he's not going to be tough on Powell. But this is what it's only 30 seconds.
In the Federal Reserve itself, in terms of the system. What do you think of that idea? I don't think that's how people think about it. I mean, it's so people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it. Dollar war in the Federal
So
Reserve.
Clive, I want you to dissect what he said there and what you think,
Well,
and I'll give my 2 cents on it.
I think my first comment is he's not right in saying it's a competitor to gold. They're two they're two different things. Of course, they're both assets, so in a sense that you might want to own both. But to say that it's a competitor gold, it's a bit like saying bonds are a competitor to equities. You know, you need to own both in the right proportions, but I don't agree with that bit. As far as it not being a competitor with the dollar, well, I think he's talking his own book here. The value of the dollar has gone down and down against both gold and Bitcoin, and literally it's gone down ever since the United States removed itself from the gold standard in 1971. So I think it's a bit disingenuous to say that the dollar is standing on its own as a value asset when it's a depreciating asset, and the other two have been appreciating at least in dollar terms. What do you think, Mario?
Well, yeah, I think I don't think, and people might think I'm crazy to say that the chairman of the Federal Reserve, he's either ignorant or he's not being honest. He doesn't know what a dollar is, Clive. When he says a dollar, he means the Federal Reserve note or the paper dollar. And like you said, ever since Nixon suspended convertibility of the dollar, and yeah, he didn't. Close well, he closed the gold window, but the dollar is still a way to gold. But what's happened since 1971 is that the Federal Reserve note or the debt has replaced the dollar. And I'm going to come to what a dollar is in a second. But yeah, like you said, look at this. I mean, how can the Federal Reserve note or the paper dollar have been a good store of value if gold has gone from $35 an ounce to 2,641 as we speak? And for this chart, Clive, goes back to 1833. So for 100 years, um, gold and the dollar was one thing. Gold is I mean, the dollar is a way to gold and a way to silver, according to the laws of the United States. And
Yes, I mean, prior to 1933, the currency of the United States was effectively the gold, and the dollar was a representation of that gold. And as you will know, and many of your viewers will know, a $20 double eagle weighed about just under 1 ounce.
that's right.
$20, 1 ounce. Now, if you want to buy an ounce of gold, you're paying more than 100 times as much.
That's right. And yeah, and the Coinage Act of 1792 described the weight that the dollar should be. Like here, the silver dollar should be 371 and 4/16 grain or 24.1 pure grams and so on. And like a eagle, the $10 should be 247 and 4/8 or 16.04 grams of pure gold. I mean, it's all defined there, and even the cents and pennies are copper. The thing that's changed and the power that the Constitution gives to Congress is to regulate the value of the coinage, and it's been done several times. I think in 1834, it was the gold definition was changed because they wanted to change the ratio between, as you can see here, the Coinage Act of 1834 was passed by the Congress, June 28th, 1834. It raised silver to gold weight ratio from its 1792 level of 15 to 1 to 16 to 1, thus setting the mint price of silver at a level below its international market price. So there
There's been a bit of background on that one, Mario. The reason they did that was because people in America were buying 17 ounces of silver with their ounce of gold, exporting the silver to Europe, where the ratio was 16 to 1, bringing back the gold from Europe, which was more gold than they started with, and then they could buy more silver and repeat the exercise over and over again, arbitraging it.
Yeah, and they've had to do it several times, as you can see here. And I think the Act of 1873, that was they call it the Great Crime of 1873. It made it to demonetize silver, right? So the US was only like on a gold basis, or if you want to call it a gold standard. So Clive, what I wanted to do now is show the public, and maybe if Chairman Jay Powell is watching this, he will learn something. Um, I will. I've got here, and I have had this coin for a long time, but I never really looked at it too much. But it's a one gold dollar. It's tiny, and it's from 1853. I don't know if you can see it.
I can see the size of it. It's
Yeah, and
looking
it's
very
and it's got
as
like
shiny. It's as shiny as the day it was made.
yeah, and I weighed it on my scale. It said 1.7, but then I went to this book here, which is a really good book, United States Coins, and it
Hmm.
goes through all the coins that the United States has minted or used, and it says here on page 255, Liberty Head. So this is a Liberty Head, 1849 to 1854. It says weight 1.672 grams. So my scale is not as exact. Composition 90% gold, 100% copper. And the net weight, Clive, in gold, pure gold, is 0.4837. So keep that number in mind. And then we're going to move over to the UK. And I wonder if Andrew Bailey knows what a pound is, because that's what a pound is, still legal tender, a sovereign. And this is from 1871. And you probably know the sovereign is 0.2354 of an ounce.
Yeah,
So,
about a quarter of an ounce,
yeah.
just under.
So here I've got a pound, and here I got a dollar, right? So if I take, I got my Hewlett Packard calculator. I don't know if you remember these. 0.2354, enter 0.04837 divided. Look what I get. 4.8.
Exchange rate of 4.86. Yes, yeah,
Yeah,
indeed, that was the old exchange rate, wasn't it?
yeah, yeah. So what I'm trying to say here, what Jay Powell calls the dollar is really an imposter. It's just a Federal Reserve note fronting itself as the dollar. Uh, the dollar, of course, is a way to gold. It should also be a way to silver. Hopefully, they'll abolish that Coinage Act of 1873 one day. And I think they should do that because there'd be more liquidity for the economy on a bimetallic standard. And Clive, the other clue or hint that Jay Powell gave to the public, at least to me, he gave the strategy that the Federal Reserve and the Treasury use to discourage people from owning physical gold. And what do you think that is? I'm going to ask you that question from what he said there.
well, I missed the interview. Let me speculate. What did he do to discourage people? Probably promised them an interest rate which was higher than inflation, which obviously is not true. Am I guessing right?
No, from that clip, he said he compared gold to Bitcoin, and we know how volatile Bitcoin can be, right? And so
Yes.
he's implying is that gold is too risky, it's a commodity, and it's too volatile. But I would argue that it's the fiat dollar that is volatile, the paper dollar. But it is I think it's a psychological um, exercise or psychological operation that the Federal Reserve and the Treasury have been conducting since 1975, because that's when they made gold legal again. And I don't know if you've seen this WikiLeaks document from 1974, Clive.
No,
It's
no.
U.S. Treasury. They're communicating with the dealers in London, the State Department, and this is in 1974, prior to the U.S. making gold legal again, like monetary gold and bullion, on January 1st, 1975. And this is what the document says. To the dealers' expectations, those are the dealers in London, because London was and still the biggest gold market, will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So uh, that's the way they operate, and that's why the bullion banks are always in there, like creating they'll come on a Sunday evening and smash the futures price, and it will go down like $100 or $2 in silver, and then people wake up the next day and say, "Well, what's happened to gold and silver? Why is it so volatile?" And yeah,
I've suffered from that myself. The Sunday night, Monday morning scenario. Um, at one point, going back quite a few years ago, I've got a lot wiser now. I bought myself some of these what they call turbo warrants with a knockout on gold. And the knockout was way below the gold price. There was almost no chance of getting knocked out. And guess what? One Monday morning at about 1 o'clock in the morning in New Zealand, on the New Zealand exchange, where there's no trading going on at all, the price dips below the knockout level for about 1 second. And of course, I've lost my warrant. So the big boys who trade in these obscure markets can move the price around to take the gold off other people. So the lesson I learned was never have a knockout price because they're going to take it off you and take the gold off you at a lower price, which is what
yeah.
happened to me.
So here's the WikiLeaks document, Clive. London wholesale gold dealers' view on U.S. gold sale and private U.S. ownership. So you've got the economic affairs, financial, monetary affairs, the United Kingdom, United States. So Telegram cable, declassified release of U.S. State Department. So and office action, Department of the Treasury. So this is what they said. And Clive, it's interesting that yesterday this headline came out uh, from Walter Bloomberg. He's on X. He's got 770,000 followers. CME Group, they run the gold and silver futures. Uh, to launch 1 ounce gold futures to meet surging retail demand. So I would say the surging retail demand is in physical gold, and the
Hmm.
COMEX or CME contract is 100 ounces, which is too much for people now to buy or to trade. But I would say this is part of this here, that we saw. They want people to go into the futures because when you trade futures, you never really take delivery because the brokers will say no to you. So they want people to be in the futures not in buying physical gold. They don't want them going to Costco or to Miles Franklin, one of my affiliates.
Well, I think it's interesting if they do indeed bring in futures trading on a single ounce, that's $2,000 worth, $2,500 worth of gold. I'm quite sure nobody will be allowed to take delivery of their ounce. It'd be a nice dream to think you could go along with your futures contract and say it matures next week. Can I have my ounce of gold? But I'm absolutely certain they won't give it to you.
Yeah, me too. What else? Oh, so that was that clip. Take that off. So Clive, I started just a little bit on Bitcoin now because, yeah, I've been focusing since 2017 on gold and silver. I decided that that's what, I've known for many years that gold and silver are going to be the place to be. They will save you monetarily when this fiat system implodes. And I did look at Bitcoin starting probably back in 2011, and I did trade in Bitcoin. I did open accounts with exchanges. And at the time, Clive, the exchanges were all like anonymous. You didn't have to give your photograph, your address, your phone number. But in 2017, things started changing, and CBOE they opened, I think, options on Bitcoin and futures on Bitcoin. I saw that some of the exchanges for cryptocurrencies were owned by companies that were linked to people like Goldman Sachs and stuff. And I just didn't like the way it was going because I thought it was supposed to be something that was outside the current financial system. And the more time that goes by, the less that is the case. And that's why I cover mainly gold and silver here on the channel because there's plenty of other channels covering Bitcoin and cryptocurrencies. I've told my viewers if you want to be involved in Bitcoin, make sure you don't leverage yourself too much. That's what I've said. But you are different a little bit than me because you're more of a generalist. You're like a fund manager and you diversify more. My view is that if I don't like something, why am I, if I'm not comfortable with something, I won't touch it. But you have a different philosophy to this. So maybe you could tell the viewers how you see things and how Bitcoin and cryptos fit into your perspective on investing.
Well, sure. So first of all, I just stress that anything I say is not investment advice. But I first became interested in Bitcoin in 2013, and I wanted to buy a lot of Bitcoin. I asked around about it, and everybody said you can't. If you want to buy Bitcoin, you have to go to something called local Bitcoins in the country where you live, and you'll be able to buy $200 there, $300 there. And I thought, you know what, that will never move the needle. It's not worth it. I'd have to go to a lot of transactions just to get a relatively small amount of Bitcoin. I'm not going to bother. And I had a full-time job, where I was working 14 hours a day, and I didn't have a lot of time to start ringing people up to buy Bitcoin. But then in 2017, one of my colleagues in the office started shouting about how he'd made some money buying Bitcoin and something else, a couple other cryptos. And I said, "Oh, I heard of that 5 years ago. Tell me about it." And so he told me how to do it. And back then, you had to go in 2013. If you wanted to buy it in any size, you'd have to go some strange exchange, something to do with playing cards called Mt. Gox, and that didn't. And it was in Japan as well, which didn't sound very interesting. But later on, he told me about some exchanges where you could buy it. Not, I wouldn't say locally, but a little bit more comfortably. So I got a little bit of Bitcoin back then. I've still got them today. I didn't think much of it at the time because I thought it was all a big speculation. But given the excitement around it, it seemed like there were a lot of people getting interested. And when something's on the move, sometimes it makes sense to have a little bit just to see where it goes. But by about a year and a half ago, something like that, maybe 2 years ago, I came to the conclusion that it actually made sense to have a very, very small amount in a portfolio as a diversified portfolio. Now, as you know, Mary, I'm a very diversified man. I never put all my eggs in one basket. I like gold, I like stocks, I like property, I like tangible assets of all kinds. Obviously, Bitcoin is not a tangible asset; it's a digital asset. But so are the rights to music or movies. They're digital assets too. So I thought, why not uh, now start to add that to official portfolio. So I've been buying it for my clients when I was working in the bank. Obviously, the bank did not have any recommendation on Bitcoin at all, but there were a lot of clients ringing up saying, "How do I get in?" And the way to get in back then, not in America, but in Europe, there were a number of Bitcoin ETFs. So we'd buy it when the client was interested for the clients, and obviously they all did very well out of that. But about 2 years ago, a year and a half ago, I wrote on LinkedIn what's called an asset allocation table for multi-millionaires. And I inserted 2% in Bitcoin as part of the table, just 2%. I got a lot of stick for that because people said, are you crazy, Clive? This is not a traditional asset. You're nuts. And I tried to justify it. I said, well, look, there's a network. I know there's plenty of people who would take my Bitcoin off me. Therefore, it's seemingly a lot of value. And the number of people who would take it off me are growing. The network is growing. And therefore, I think there's an argument to hold a very, very small percentage. It's got a good outlook for the price. And on the other hand, it doesn't behave in the same way as gold or property or equities. So it might reduce the volatility or it might increase the volatility, but it seemed like it would increase the Sharpe ratio as how we look at portfolios. So I wrote that down about a year and a half ago on LinkedIn. Anyone can go and look it up. And then about 3 months ago, 2 months ago, I wrote that maybe it's time to increase the exposure to 5%. Now, the reason for that is everything had changed since January this year. In January this year, they introduced the ETFs in the USA. The introduction of the ETFs. Now, I know that's not Bitcoin. That's just a security, paper Bitcoin, like paper dollars or paper gold. It's not the real thing. But it allows a lot more people to participate in the price movements of Bitcoin. And if people buy those ETFs, the underlying ETF has to buy the Bitcoin, which was going to be positive for the price. That's why I thought that it was a good idea to have a slightly higher exposure. I'm feeling a little bit uncomfortable now with 5% because that 5% has grown because of the
Yeah.
huge surge in the Bitcoin price over the last 2 months, month and a half. I'm starting to feel very uncomfortable if people haven't top sliced a bit. But the underlying argument for Bitcoin hasn't gone away. It has got stronger. And I'm looking in particular at the appointment of future President Trump. He's very pro Bitcoin and he's putting in place in all the key positions people who are pro Bitcoin. For example, the Scott Bessent. Um, what's his position now? He's been nominated
Treasury Secretary.
Treasury Secretary. So he's a pro Bitcoin. I'm just reading something that he said. He said crypto is about freedom and the crypto economy is here to stay. He called it the brave new coin. Um,
He's also
uh,
his biggest position though for his hedge fund is gold. Just want
yeah, I mean, like me, I mean, I have far more gold than I have Bitcoin, but
I
it's
wanted, can I just about Bitcoin up until probably it was 2017, maybe 2018. The way I bought Bitcoin was through there was like an exchange online in the UK. It wasn't like a crypto exchange like we have now, like where you trade all the different cryptos and Bitcoin and also they have derivatives, but it was an exchange where you went in and people would just give you a price for how many bitcoins they were selling, and you could sell or buy, and then you contacted them and you gave them they gave you their bank details, like UK bank account sort code, and you sent them the pounds there, and then they sent you Bitcoin into your Bitcoin wallet. But yeah, the regulators in the UK, the banks, they stopped that. They closed down these exchanges, and I didn't like that because I thought it was quite private in a way to just do it like that. And their argument, of course, is always because of money laundering and tax evasion. And that's the thing I don't like, Clive, right? Like I was looking because I have an app called Blockchain, which I've had for years, where I used to sell Bitcoin or stuff. And the reason I sold Bitcoin is that I put like $1,000 into this Bitcoin Capital 3 fund, which was founded by Simon Dixon and Max Kaiser. And this was in 2016. And it's a private fund. They've paid a lot of dividends in Bitcoin and other cryptos. And I use this blockchain app to liquidate that. And yes, the other day I went into it again and I saw that I had this coin called Stacks. And I received that 4 years ago, maybe even, yeah, it's 4 years ago, maybe early next year. And at the time, I couldn't do anything with it. It was 100 stacks and it was worth about $50. And I just left it there. But now I was able to send the coin somewhere. And so I send it to, I opened an account yesterday with Kraken. And it it didn't take long, but they want your a government issued ID. They want your address, your phone number, how much you earn, what you do, and I didn't like that, but I did it, and I sent that Stacks. And actually, Clive, when I got that Stacks, it was like what they call airdrop, so I didn't pay for it. So I got $300 for that Stacks. So. But it just goes to show how everyone, you're going to be in a digital world, and everyone and the government and the regulators, they're all going to see what you're going to be doing. That's the only problem I have with the Bitcoins and the cryptos and the way they've gone. Not that I want to hide anything, but I just think if I don't mind digital things, but why does the government and regulators have to get involved? That's what I don't like.
Yeah, well, your story is kind of similar to mine. Back in 2017, I was writing on a place called Steam. You've probably heard of it.
Hmm.
I expect you wrote on Steam as well.
Oh, I did.
And when you wrote articles, you could earn
Yeah.
a lot of money in something called Steam, which was a cryptocurrency.
Hmm.
And I kind of didn't pay a lot of attention to it until one day I discovered that my Steam that I'd earned was worth quite a bit of money. And that was maybe 3 years after I'd stopped writing on Steam. So I kind of stopped and left it there. And I one day went back and had a look and, oh, this is actually worth a lot of money. So I took the Steam off and I bought Bitcoin with it. I don't know if Steam is still around, but if anyone's interested, you can still go and look me up on Steam. You can look up Swiss Clive. You'll find my blogs there, and you'll find that I wrote about the discovery of Bitcoin and all sorts of other things. It wasn't just Bitcoin. I wrote about lots of things there, but that was one of the ways I came into holding a little bit of Bitcoin back in 2000. Well, I earned it in 2017, but I didn't realize I'd got it until about 2021.
Yeah, and I used to post all my videos on Steam. I still have my account there, and I stopped posting now because it's not really paying anything. And I made a lot of Steam as well, and I changed it into Bitcoin, and that's why I had that, accounts at exchanges. And the other thing you should check, Clive, because I think it was 2020, Steam, there's a fork on Steam into Hive. I was doing a live stream on a Sunday during lockdown, and someone said, Mario, you've got 2,000 Hive coins. Do you know that? I said, what is Hive coin? And they said, well, it's a fork from Steam. And at the time, the Hive coin was trading at, I think, $1. So I sold that for Bitcoin, or sometimes I used to do it for Ethereum because the Bitcoin charges were getting higher than Ethereum. And then I would switch the Ethereum into pounds. So I got the Hive, and then I started posting on Hive. And until recently, I posted on Hive, but again, I was getting nothing, no Hive coins or Hive Power, as you call it. So I actually had some Hive left a few days ago, and I sent it to. Have you heard of Uphold, Clive? Uphold. It's a
Yeah, rings a
virtual
bell. I don't know.
the virtual card, and you can send cryptos in there, and you change it into pounds, and it's like a credit card. So I sent my last Steam to my Uphold card, and I liked Steam or Hive, sorry. I liked Steam and Hive because they were blockchain platforms where you actually had some kind of utility and you earned something from it. And the thing about Bitcoin, yes, the technology is very interesting. The blockchain, the open ledger, the incorruptibility, the trust, the fact that you don't need to trust anyone. I like all that, but the only thing I don't see is the value in it, what actually flows there. It's just a concept that helps, but it doesn't really transfer anything of value. And the only reason the price has gone up is because people think
The network has
it's a
grown.
network. It's a network thing. It's
Yeah.
it's kind of uh, you know,
I mean, if you look at
gonna
it, you
say it,
don't.
Clive. It's like a pyramid scheme, isn't it? It's a network.
Well, let's put it this way: that I think the US dollar is a pyramid
Oh
scheme
yeah, but at
because
least
they're producing more dollars than there are people who want
yeah,
to take them.
at least the dollar, though, even though it is a pyramid scheme, and I agree, is backed by some loans and taxation. Yeah. Anyway, um, and I've heard from some people that there's more to Bitcoin that they were looking at it even before Satoshi Nakamoto came out, that it could be related to, and I wouldn't put it past them. After 2008 and '09, I think the powers that be in the US and London knew that people were going to question the system. So they had to produce maybe an alternative to gold and silver. I think that's the other reason why. So maybe where should we move to now, Clive? And where is Bitcoin? Has it held above 100,000 or is it corrected?
Um, it's below 100,000 at the moment. 90, I mean, I don't know if you saw this, but overnight it crashed. There was a huge crash in the night. So you won't see it now. It's about 98,000 now. But it was trading well over 100,000, maybe 105,000, 102,000, I'm not sure. And it crashed all the way down to about 86,000 very
Wow.
briefly. And then it recovered extremely quickly. Now,
I
probably that was a bit of engineering of
guess,
manipulation by somebody who was taking out all the stop losses. But
yeah,
it recovered very quickly too.
I guess Jay Powell is right about the volatility there. But oh,
It's enough to put anybody off, and that's why if those who have any interest in it should only hold a very small amount, which they can earn back from their salary within a few months. I mean, if you're putting your annual salary into it, you're taking a huge risk.
and Clive, it seems to me like the Trump administration to be and the officials there, even Howard Lutnick, he was being considered as Treasury Secretary. He's the head of the biggest bond dealer in the world, Treasury bond dealer in the world, Cantor
Yeah.
Fitzgerald. He's been made Commerce Secretary. Well, he will
Yep.
and he said in July at a Bitcoin conference, I think in Tennessee or Kentucky, I forgot get which state, that Bitcoin is helping the U.S. Treasury because people uh, they get into Tether or USDT to buy the crypto, and Tether go and take those dollars and they buy T-bills, thereby helping the U.S. government, which is ironic because Bitcoin is supposed to be an alternative to the U.S. government. But one thing that seems to come out from the Bitcoin community is that the dollar. Yeah, I agree with them about the dollar. The dollar is becoming worth less and less, but they seem to think that Bitcoin will be the solution to the debt problem. And I picked up this book the other day from my
Oh, yes, yes, yeah, I have that
shelf,
one too.
and I
Same thing, same book.
and I had a
Snap,
look
snap.
at the South Sea bubble in
Yeah.
England. it started really in the early 1700s, culminated in 1720. And I read again about it because it's always good to read things again because it refreshes you. And one of the reasons they started South Sea Company is that the UK had a lot of debt and they had to find a way to earn the interest for the government to keep that debt going. And they formed this South Sea Company. And it was supposed to open up the markets of South America to England, but the Spanish never did that. They didn't want the English trading or taking stuff from South America. But still, the South Sea Company stock kept going up, and it became a bubble. And if you read this through this, and the first time I read it, I didn't think much of it, but they had other bubbles. It wasn't just the South Sea Company. There are 86 other companies that came up, and they were just like on the same model of the South Sea Company. This is going to be an endeavor to do this and this, and it's going to solve all the problems. And it reminds me of the whole crypto altcoin environment right now. So that's all I'm going to say about that. Uh, you might not agree with me, and I'm not telling you to get rid of your Bitcoin or your cryptos or altcoins, but I think people need to beware. And I know this was 300 years ago, but Clive, does human nature ever change?
We ever since the beginning of time, we've had bubbles and pops. So this is not new, and we will see
Yeah.
countless more as time goes on.
Did you
The
hear, Clive, did you hear about that girl, the Hawk Tuah girl?
No, who's she? What's she do?
Well, this is a girl who she was interviewed by a YouTube channel by these young guys, and they said, "What do you do to please your man?" And she was, I don't know how old she is, 20, 22, and she said, "Hawk Tuah," and something really rude, and she went viral. She decided to issue a Hawk Tuah coin a few days ago, and it went through the moon on when they issued it, and then it collapsed, and people are all angry and they want her put in jail. But I'm sorry, for you to put your money in something like that, maybe it's you that needs to be in the mental
Yeah,
institution.
that's called a rug pull. People
But-
launch a cryptocurrency,
Yeah,
and then when everybody's getting very excited about it, they immediately sell everything. They've got the majority. They immediately sell everything, and everybody else is left holding the bag of worthless currency, worthless
yeah,
cryptocurrency.
yeah,
This is why I think you've really got to be spending it. If you want to go outside of Bitcoin, you really have to spend an awful lot of time studying and knowing what you're getting into, because so many of these other cryptocurrencies don't really have much going for them other than the sort of fun and the speculation of seeing the price rise and fall and being able to gamble and try and make some money off the next guy not being as good as you.
yeah. Oh, here you go, Clive. I'll show you here. I'm surprised you didn't buy any Hawk Tuah coins.
No, no,
Here you go. You're
I
telling me the Hawk Tuah girl is not a financial guru? I'm shocked. So here you go.
that's a lovely picture.
Yeah.
I hope YouTube lets you keep that one on.
That- well, this is let's see, Hawk Tuah coin. Uh to Let's see if we find one about the
The rug pull.
yeah, that's the girl there. And
Oh yeah, so there's a lot of memes. They're making memes about her all over the place.
so here we go. You got to give him the Hawk Tuah and scan this thing. So it was issued. It went up to I don't know how much, and then it just dropped. I mean, and
And
there will be
it,
many more of these. I think.
it's very funny how it looks like that song by Chuck Berry. Am I allowed to say ding-a-ling? I don't know.
Yeah. I don't know. Well, yeah, you should, I guess. Could be.
It looks a bit like that song.
Hmm. Oh yeah, Clive. The other thing I wanted to touch upon to wrap up here, and I'm gonna have to lower the curtain in a minute, is this here. Repatriated gold reaches historic highs. Money metals. This is from Yan. Neuenhuis. He's a Dutch writer. He's I think this is akin to having like a bank run, like a sovereign bank run, and he's talking about the fact that the gold reserves in New York and London are dropping quite a bit, even though it's pretty gradual. He says here the share of global official gold reserves not stored at Federal Reserve Bank of New York and Bank of England in London has reached 78% in 2024 from 51% in 1972. So basically, there's only 22% of official gold reserves in New York and London. And I think that's going to make it harder and harder for the LBMA and COMEX to manipulate the paper price. What do you think?
Well, it shows me that people are more reluctant to hold their gold in depositories like the UK and the USA, where there have been sanctions. I mean, we mustn't forget that London and New York have basically frozen Venezuela's gold. And so countries which maybe are still friends with the United States and UK, but are not sure that they always will be, they're, I mean, India would be a good example. They're bringing some of their gold home and putting it into their own reserves somewhere closer to home.
Yeah, I mean, I made a video about India. I think they've taken 202 tons this year from the Bank of England. I spoke about that. Australia, I think they hold all their gold at the Bank of England. I think they have just over 80 tons. So yeah, I think that's really important, and I think with the way, let's say, the Trump transition team and Trump has been quite aggressive towards the BRICS, I think that that will tend to accelerate. Wouldn't you say so?
I think they're looking for the BRICS nations are looking for a plan B just in case something happens. I personally think the trading of commodities in dollars are likely to continue, but I don't think it's going to get bigger. I think the tendency will be there'll be more trading in some other currency down the line. When you're talking about trading between India and China, for example, or Brazil and China, today it's being done in dollars. I think less so in the future, but I don't think it's going to be a an overnight flip. I think it'll be gradual.
Yeah, I remember when I started speaking about the petrodollar like 2016, 17, and I said, yeah, the petrodollar is it's gonna go away, but it's gonna be very gradual. It's not like a dinghy making tacking, it's more like a super tanker. But yeah, as for commodities, Clive, I think the yuan is going to be a currency, maybe the ruble, or even in Brazil, I think they used to have a commodity exchange in the Bovespa many years ago that was priced in the local currency. But there's a Shanghai Futures Exchange, Shanghai Gold Exchange, and maybe also some exchanges in the Middle East and places like Dubai. And does that mean they're going to have a BRICS currency? I don't think so, because President Trump also noted, oh, they might have a currency that's backed, a BRICS currency. And it's interesting that he said backed. He didn't say, and he probably meant backed by gold, but he didn't want to use the word gold. But what I think they're trying to move towards, Clive, is like the kind of system we had in the 19th century up until World War One. And it wasn't even a system, it developed organically. There weren't any meetings between nations to work it out. But the reason they're having it now is because they want to emulate it maybe as well as much as possible as a natural system. And all it means is that the currencies that they have are, instead of being backed by U.S. treasuries, they're going to be backed more and more by gold, I think.
I think that's got to be the direction of travel in the future. I don't know if they can do 100% gold backing for the means of exchange between nations, but I think that's the bottom line. They're going to have some. If you have a trade between Brazil and China and India in local currencies, those nations are going to want to see some sort of discipline on the ratio between gold holdings and the currency to make sure that they're not buying a pup.
Yeah.
So I think there will be some sort of agreement down the line where each nation agrees to keep some ratio between gold and their actual currency for the purposes of trade. And that obviously at the end of the day could well be exchangeable into gold at an agreed rate. We'll have to see.
Yeah. I think during the British Empire in the 19th and early 20th century, uh, there wasn't any like written down rule, but I think all the currency, UK currency was back to around 33 to 40% with gold. So people were confident that they would be able to go to the bank and get their pound. Uh,
Yeah.
the reason that it broke down was not because it was a bad system, it's because they started this war that the only way they could finance it was to suspend the system and basically start uh, printing the tickets or the notes for this out of thin air. And that's so my argument is war is always the problem, you know,
Hmm.
because it suspends normal human behavior. And Clive, with that, just wanted to ask you if you've got any final words and thoughts for the viewers as we go on to the weekend.
If anybody's interested, I wrote an article last night or this morning, I think it was after midnight, about the collapse of the euro. I think the euro is now showing signs of disintegration. If you look at LinkedIn, I put up my name, Clive Thompson, and you'll find my latest article, which explains why I think this is currently happening.
Yeah, I'll put a link as well. I think I can put a link in the description of this video. And I spoke about that this week as well, Clive. And I don't think it's the end of the world for Europe. It's probably a good thing. All it means is that we will go back to having a Deutschmark, a French franc, Italian lira, and those countries. Maybe there will be a little more, how can I say, independent. But
Yes, and the discipline which they're currently supposedly subject to will have been removed.
yeah, yeah. And that's probably another reason why you want to have gold if you're in Europe. And if you want to have Deutschmarks, if you want exposure to Europe, the way to have exposure to Deutschmarks, even though they're not back yet, is by having German government bonds. Because once the euro goes, those government bonds are going to be redeemable in Deutschmarks. So there you go.
Right. Did you know, Mario, that the yield on German government bonds, 5-year bonds, is currently 20 times as much as the yield on Swiss franc bonds, where the yield has, which was closely tracking Germany up until a few months ago, Swiss franc bonds, the yield has dropped to less than 1/10 of a percent for the 5-year. So
Yeah,
the German 5-year is yielding 20 times as much as the
yeah.
Swiss 5-year bond.
I saw as well you put something that about the 30-year Swiss bond is almost back to zero. Uh,
Yep.
I think it's probably a lot of investors in Europe, getting out of the euro and they're going to the Swiss franc. It's nothing to do maybe with the fact that people are not concerned about inflation. It's a safe haven move, would you say?
Yeah, exactly that. People are saying, why would I be holding an investment in France or Germany when Germany's going into recession? France is in political chaos. We don't know if that Europe is going to
Yeah.
break out, or Europe or the euro. Let's get into something which has got a simple policy. The Swiss government's got a simple policy. People know where they stand.
Yeah, and even the Germany, they're supposed to have elections, general elections early next year. And the AFD leader or someone important in the AFD, which is what the mainstream calls far right, this person said that if they are in government, they're gonna leave the European Union. I thought that, Germany leaving the European Union, that's the end of the European Union, let alone the end of the euro.
Well, when Europe started, we had half a dozen countries in the original Europe and maybe about 15 by the time we got the euro. And the whole of Europe was being supported by effectively three countries, Germany, France, and UK. And all the rest were basket cases to some extent. Now that Britain's left the EU, we've got basically two countries left which are supporting all the others in a certain way, i.e., France and Germany. But it looks like both of those are heading in the same direction as the rest of the bunch. So this is where I think we have the early signs that the euro could be disintegrating.
All right, great. Clive, thank you for your time again. And for all of you guys as well, thank you for the interest in the channel. And I wish you a great weekend, Clive.
Thank you very much. Happy weekend and happy Christmas to any listeners who don't hear me before they have their Christmas holidays.
All right, thank you.